I got a lot of questions around Visa after it's down pretty close to 5% over the last few days, and I didn't really think I would be getting questions or I would be talking about Visa again because I talked about it before when it was 155, 156. It has played out, it has gone up, but now it's going back down, and it's pretty interesting. And the main reason why Visa has been going back down is because, of course, I mean, it's no surprise because they've been doing it to every single company. The DOJ is suing Visa for antitrust lawsuit, saying that they have a debit card monopoly. And this is not just Visa. I mean, they've been doing it to pretty much every single company. Amazon got sued, Google, Apple. Every company is getting sued. Every company is now suddenly a monopoly. And a lot of these lawsuits haven't really gone too well. With Google, it did, and they did get Google, of course. But most of them are either pending or that hasn't been going too well. But that's what's been happening. And they're going after Visa. And that might be scaring a lot of investors. But this is a pretty funny post I found on Twitter. And it says when the DOJ sued Meta in 2022, Meta initially went down, but it was an amazing buying opportunity. Same thing when I sued Google in 2023. The stock went down and it ended up being an amazing buying opportunity. Same thing with Apple in 2023. And I also believe they sued Amazon in 2023 at the end of 2023. And it was a good buying opportunity. And now they're suing Visa as an antitrust monopoly kind of lawsuit. And it's funny in general. And no one's forcing those networks to use Visa. But they said more than 60% of the US debit transactions are processed on Visa's debit network, allowing the company to charge over $7 billion in fees each year. But if you're in the United States, we know that we have Visa, we have MasterCard, we have different kind of players. Now we have the merger of, I believe, Capital One and Discover. So we're going to have a much bigger company that's going to compete with Visa and MasterCard. And it's been operating this way for decades. Visa has been growing market share. MasterCard has been growing market share. So I'm not really sure what they're talking about. And Visa responded to them, and they pretty much said the same thing. They said that it's just one of many competitors in a growing debit card space, and they called the lawsuit meritless. And I think it's meritless, and I don't think it's gonna stick around because I'm just not seeing how Visa is like just forcing everyone else to just use Visa and you can't use something else. And if that was the case, then we wouldn't have 60%. So we'd have much more than 60%. And they said when businesses and consumers choose Visa, it's because of our secure and reliable network, world-class fraud protection, and the values that we provide. It's not because they're forcing them to use Visa. So again, I'm not sure how or where this lawsuit is going, but they did argue that the company is entering into some kind of agreements that they force and they penalize customers that decide to use other payment networks like MasterCard and others. And that could be true. I'm not sure 100% of the details, but I know that MasterCard faced the same kind of complaint last year and they settled it and nothing has happened. Life goes on. MasterCard is still here, and it initially dropped back then and it came back up, made a new high. Same thing with Visa right now. It's going down because of this lawsuit. They called it meritless. They just don't see how it's going to stick around. And I'm with the same view. I'm a Visa shareholder. And if it keeps going lower, I'm going to take it as an amazing buying opportunity to add even more. And I'm going to tell you at what price and tell you all my valuation model and all that kind of stuff. But if you're looking at Visa today, to make this video short, you're getting an amazing company with a wide moat, with around 56% net income margin. I mean, this is extremely, extremely high. Most companies don't have 50. This is higher, I believe, than Microsoft, higher than most of the tech companies you want to own. Has 56% net income margin. And it's all like inflation index. Monish Pabrai talked about it before, that if prices increase 10%, Visa is still charging the same fees, the same percentage, but this percentage goes up because the basket price went up 10% with inflation. So he said that their revenue is also inflation indexed, and it's a pretty amazing way to think about it within a company. They don't have to raise prices, they don't have to do anything. It's inflation indexed. Pretty amazing. So you're getting this company 56% net income margin. This company is still growing. It's not a dying company at all. It used to grow 15, 20%, but those days are over. But for a $600 billion company, which is not small at all, this company is still growing so far this year, 13%, expected to grow 11% 2025, then 13 to 15%. So I would say 12 to 13% over the next 5 years is a fair assessment for Visa. It could be a little bit higher because they have many different new services that I discussed in my previous video. They are growing 30, 40, 50%. And they could make up for the slower growth in the legacy business. So I would say, 12, 13% earnings per share growth over the next 5 years is a very fair estimate for Visa. And you're getting all these things for 25 times earnings, which and this is after the drop. Before the drop, it traded as high as pretty close to 27 times earnings. 27 times earnings was a little bit too high for me to ever consider buying Visa, or for me to ever tell you that Visa is a buy. When I talked about it and when I bought the stock around $256, it was trading around 23 to 24 times earnings. Back then, Visa was offering an amazing buying opportunity, but now it's trading at 25 times earnings. And if you look at it on a historical average, 25 times earnings, 23 to 25, has been a good time to be buying Visa, because the lowest Visa has traded at over the last 10 years was around 20 times earnings, and now you're buying it around 25 times earnings, and it's really not bad at all. But if you think about it, 25 times earnings, if you think it's not bad, and if you don't see a multiple contraction, and if you believe Visa will keep growing 12 to 13% earnings per share over the next 5 years, then I would expect the return of Visa stock to be pretty close to the earnings per share growth if everything else remained the same, of around 12 to 13%. The company is also buying back 2 to 3% of the market cap every single year, and they have a small dividend, but they're increasing the dividend 10 to 15% on an annual basis. So I would easily see 12, pretty closer to 13% annual return for Visa from here over the next 5 years, which is not the highest return in the market, but it's not a bad return for a company with this kind of safety, with this kind of a moat that I don't believe is going anywhere despite the lawsuits and all these kind of things. I mean, I just don't really know what they could potentially do, but I just don't think it's going to be anything meaningful. But 13% is not a bad return for a company like Visa, and I do own it at 256 for me personally, because I have other investments in the market, other better opportunities to add to. I'm not buying Visa at this price, but if it gets closer to my cost basis, 256, if it gets anywhere around 260s, I would be interested in adding more. If not, I'm personally fine. I'm buying a little bit better opportunities. But if you're a new investor, or maybe you're looking at Visa, you don't own it before, I mean, I would highly encourage you to research the stock at this price, take a deeper look, because I think it's fairly valued for a amazing quality monopoly company, or we should say monopoly, I should say, wide moat company. It's not the best value, it's not the best return, but 13% for such safety isn't really bad at all. And this is all I had to say. It's not financial advice, just my opinion on Visa. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.